Alright, thank you guys so much for tuning into today's live stream, or not live stream, but today's video. Today I'm going to be going and recapping over March 3rd and March 7th weekly market outlook. So to begin the video, I do want to take a look at the economic calendar here for next week. So next week we have ISM manufacturing PMI. We have, so NFP is next week, right? We have NFP here on Friday, unemployment claims on Thursday, and yeah, it's going to be a pretty eventful week this upcoming week. So now that we have a kind of, pathway of where we can expect some volatility here coming into the markets, let's get into the actual technicals here. So last week we actually closed here on the monthly candle, as today is at the time of the recording, it is March 2nd. So it is a brand new month, and whenever we are coming into, I guess whenever it's the first initial week of the month, you can anticipate some sort of manipulation, right? It's very common to see open manipulation and then something like that, right? That's common. That's very common for us to see. Like coming into last week, if you guys watched the weekly market outlook, I explained to you guys how or why I think this week was going to be a down closed week, right? Or a down closed candle. So let's pay attention to here. It will be fast, but let's pay attention to how we closed here last week, right? So last week we had a pretty bearish closure here. So this is the weekly candle here. And based on how we closed here on that weekly candle, I was anticipating for the next weekly candle to create the open. So that's very common, the open. And whenever we open, there's going to be some sort of manipulation, right? Manipulation and then a closure. What do we do this week or last week per se? We opened, manipulated higher into a fair value gap, and started to displace lower. So that manipulation part of the market's very common, right? So coming into this week, I could anticipate some sort of, manipulation higher or something like that. But going back to how we closed here last month. So this candle right here is actually the monthly candle of February. And notice how we had the open. We had it open, high, low, and then close. Look at where we closed, right? We closed within this blue range right here, from the 0.3 to 0.2, right? ICT teaches this concept as TGIF, and it's just an abbreviation for Thank God It's Friday. Essentially, what this concept is open, high, low, close, right? Because a candle is not going to create something like this, right? The open, manipulation, and just continuously expand. At some point, the candle is going to close, and whenever candles close, right, there's going to be that retracement back inside the dealing range. So that's essentially what that's essentially what the TGIF is whenever prices retraces back inside the dealing range of a specific time frame. So in this case, I applied the TGIF setup to the monthly candle, and more often than not, we retraced back inside that TGIF zone here to 0.2 to 0.3 of the monthly candles range. So coming into this week, I am anticipating here on NQ to possibly take out the weekly low. But the one thing that I'm a little bit hesitant about is that we have to respect this daily fair value gap. We have to show respect to this daily fair value gap if we're going to take out the weekly low. So what I mean by that is once we rebalance or once we trade up into this inefficiency here, I want to see us respect this daily fair value gap and continue lower. If we do not respect this daily fair value gap here on the daily time frame, we are most likely not going to, I guess, we're not going to be in alignment with the weekly time frame or the weekly order flow. So weekly time frame here on NQ, monthly time frame here on NQ as well, both suggesting lower prices. However, like I stated before, let's take a look at the daily candle here. So this daily candle here on NQ is actually Friday's candle, right? And with the way that we closed here on Friday's candle, I could actually anticipate for us to take out Friday's high of day. And notice how the daily candle here, the daily time frame, is telling me that we're going, or is suggesting to me that we're most likely going to continue higher or price higher. However, on the weekly time frame, we're pricing lower, or is suggesting to price lower. So there's a misalignment between the daily time frame and the weekly time frame. So I can't apply the weekly order flow as of yet, right? Like I said, the daily time frame is not exactly in alignment with the weekly order flow. So coming into this week, I would elect to wait until there is a bearish candle here on the daily time frame or 2-day time frame, 3-day time frame to align myself with the weekly order flow. If not, if there's no bearish daily candle, then I'm not going to force this bearish order flow here on the weekly time frame. I'm going to wait until prices tells me that we are in alignment, right? But as of right now, on Monday, coming into next week, I'm actually going to anticipate here for prices to take out the daily high, Friday's daily high here. And I want to see prices retrace here back into the 4-hour dealing ranges premium level. So from this 4-hour swing high right here, I would denote that by a red line or a green line. So from that 4-hour swing high to this 4-hour swing low, there is a dealing range. And within this dealing range, there's premium and there's discount. Premium, I'm going to denote that by a red box. And I actually want to see prices here on the daily time frame trade back inside the premium of the 4-hour dealing range. So that, to me right now, is my objective coming into on Monday. Once we complete this objective, or after we take out the daily high, I'm not going to force a daily objective. I'm just going to use the intraday time frames, such as the 4-hour, the 6-hour, the 8-hour, and the 10-hour. And that is because every single time frame has an objective. And if you can apply the daily bias, I guess, concept, like taking a look at a daily candle and anticipating where we want to go based off of how we close here on that daily candle, I'm going to use that concept and I'm going to apply it to the 4-hour time frame, the hourly time frame, the 30-minute time frame, even the weekly or the monthly time frame, because prices is fractal. So yeah, that's kind of what I want to see here on NQ. So bearish weekly order flow, but the daily time frame isn't in alignment with that order flow yet. So I'm going to wait, and I'm actually going to use the daily candles as my higher time frame objective. So like I said, coming into next week, I want to see us take out Friday's high of day and retrace back into the premium of this 4-hour dealing range. And I have I guess, a trade plan here. So I have the entry pattern being this hourly fair value gap. My objective, my higher time frame objective, is for us to retrace back into the premium of the daily, or retrace back into the premium of the 4-hour dealing range. My model is actually based off of the 4-hour / daily model, entry pattern, 1-hour fair value gap. So I have it right here if prices allows me to actually take it. So I'm just gonna wait. I'm gonna wait until we open up here at 5 p.m. Central Time. But yeah, that's going to be my objective here, my weekly market outlook here on NQ. ES, it's a little bit of a different story. So the way that we close here on ES, I don't necessarily have a daily bias or a weekly bias, right? So with the way that we close here on ES on the weekly time frame, I'm not too confident in the idea that we're going to take out previous week's low, but I'm actually more confident in us taking out previous day high. So I can't, I'm going to elect to not use the weekly time frame as a higher time frame objective, but use the daily time frame as my daily, as the higher time frame objective, right? Because with the way that we close here on the daily candle here on Friday, I can anticipate for us to take out previous day high. It's very clear to me that we're most likely going to take out previous day high. That's like the most likely draw for ES. And that would be the objective. Let's see, what else do I want to cover here? So yeah, ES, I don't have a weekly objective. I do, however, have a daily objective. I want to see us take out the daily high. And I did mark this market structure shift here on ES. So if we trade past, let's just say that prices, takes out this market structure, or takes out this swing high here, that would be considered a daily market structure shift, and that would cause us to continue possibly higher. That's just a another concept that I haven't really gone over with you guys as much. But yeah, so on ES, no weekly objective. I'm going to elect to use the daily time frame as my higher time frame directional bias. And one thing that I do want to mention here too is that we actually have SMT here between NQ and ES at the lows. So NQ, we did end up taking out this low here, whereas ES has failed to. So if this weekly low here does end up being a strong significant swing low, it would make sense because there is SMT. So whenever I was going over the weekly market outlook that from last week, I highly recommend that, because literally every single thing that I stated in that weekly market outlook video happened this week. But yeah, going back to the present here, because there is a lack, or because there is SMT here between NQ and ES, it's reasonable for us to anticipate that the weekly lows here on both of the indices could be a strong low, because SMT is present. But last week, SMT wasn't present, so I can actually anticipate the opposite for us to continue in that certain direction. But as of right now, because there is SMT, I'm actually going to be a little bit more wary that the weekly low here on both the indices could end up being a strong swing low. Yeah. that's my weekly market outlook for NQ and ES. And the last thing I do want to go over here is the dollar. So the dollar here, we have a pretty bullish closure here on Dixie. So with the way that we close here on the dollar on the weekly time frame, I could actually anticipate for us to take out the weekly high. The weekly high would be my market, or would be my higher time frame objective. And notice how the weekly high is the same high as the daily high. And this is the daily candle here. So the weekly high, same high as the dollar. Or I mean, same high as the daily time frame. So that means I can anticipate for us to complete the weekly objective within a day. So on Monday, I'm actually anticipating for us to take out the daily high on the dollar, and for us to continue, and for us to take out the weekly high as well, because they're the exact same highs. But yeah, that's going to be all for the weekly market outlook video for today. I just want to keep it short. I do have a Discord where I post my weekly market outlook just a little bit before I do the video. So if you guys want a, I guess, early access to that, I would recommend joining my my Discord, a place where I know I interact with my with like-minded individuals like you and others like yourself. So if you guys want to join, it'll be in the link in the description. Thank you guys so much for watching, and until next time, be safe.